Hello, just letting you know that this is a video to help explain how to use some of the profit first profit. So I'm going to jump into the demo company right now and run through some of the tabs and how you can edit the information so that you can get a forecast of where your cash is going and what it is that you want to do with your business or your personals. I do have people who are using it personally, so hi to you as well. So across the top, once you're in your business, there's a heap of icons here. So when you hover over the icon, it tells you a little bit more information about what that is for. So I always start with the percentages button. This one is setting up the details, and then this one is the accounts and the rules around the accounts, which we see better on different screens. So I don't start with that one. So in here are the standard percentages for a small business, turnover less than $250,000, based on profit first. So you may not be working off these percentages, and that's absolutely fine. If you are working towards the percentages, we might see last quarter as 3%, this quarter as 4%, and then next quarter as 5%. Or it might not be that quick. So it really depends on your business and where you're at. And this forecasting tool, the Profit First Profit, helps with that significantly. We can see what the future brings when we're looking at percentages and see where we need to make tweaks to get our outcomes that we're looking for. So we'll go across to the next tab here, which is the allocation calculator. So if your business has pretty stable income, and in a household, if you're getting a salary, then you can put the same amount in each time, and it will calculate through and tell you how much dollar worth based on the percentages here to go into each different bank account. So if your business has variable income, so this week it's 15,000, next week it's 2,000, and we use the percentages to smooth out the fluctuations and add dollars to each of the bank accounts. So that's the calculator button. Then we've got the bank balances button here. So for businesses with fluctuating income, this bank balance section is really invaluable because it gives you an expected balance based on what the rest of the numbers that you input are. And we compare it to what's actually in your bank account today. And so if your bank account has only $500 in it, you put in 500. If your tax account has 3,500, if your owner's pay has a little bit more or a little bit less, you're putting those actual figures in, and it will then update the forecast exactly right. So from a personal point of view, we'll want to put your bank account opening balances in today to work out what the forecast is, and then maybe come in once a fortnight or once a month and update it and make sure that everything's working according to plan. Once you've updated the dollars based on what your actual bank accounts are, you press save. And then from there, we go into the estimates. So with the revenue entry, we've got a one-line item in here called income. I've already pre-filled some of this with $2,000 every single week. If you want to change that, you can edit with the little pencil here, and that will edit everything on the left. So it'll change your name, it'll change your certainty. So with the certainty, it's 100% that it's going to happen. So I leave everything at 100% with the basic forecasting. Just because then if I say it's a $2,000, it'll be $2,000 coming through. We've got a choice as to whether it's a positive or a negative. So in this revenue window, it's always going to be positive. In the expenses entry, it'll always be negative. And the exception to that rule is if you're going to do bank transfers between one account and another, which is an intentional transfer later on. So an example of that would be we've got an annual bills account. We know our insurance is due for payment on the 1st of March. So we'll do an intentional transfer from annual bills through to operating expenses so that it's paid from the operating expenses account. So that's one of the transfers. So that's where you would have a positive instead of a negative in an expense row where it's being topped up by a different account. Okay, so then we're going to click on this green bucket, and I call it a bucket item icon. And this is where you can either put in recurring entries or one-off entries. So if it's a one-off entry and you're getting $5,000 in on the 20th of January, then put in that, press the fill button, and that $5,000 comes in. Now you can, at this stage, put dates in for up to 5 years. The system might be changing soon. It might be going only 3 years in advance, but at this stage, I utilize the whole 5 years. So if you know that it's 5 years, $5,000 coming in every 20th of January, then you can set that up as a recurring entry. So on here, you've got that recurring entry. You can put in whatever those figures are. You can have date start, date end, and then the repeating. So you can go every 2 weeks. So that would be every fortnight on a Tuesday. You can go every 1 day, every day you're getting money in or spending money out, every week, every month, every year. So every 3 months might be something for your GST, for example, BAS. So it comes through. Once you've got that set up, it's really easy. Then press the fill button and it will push through the fill button into all of these dates. Now, if you do make a mistake and you want to adjust everything, best thing, put a 0 in here, do it every day. So every single day, 16th, 17th, 18th, all the way through. Press fill and it will clear the slate for the whole 5 years, and then you can start again, do another recurring entry and update that amount. So lots of different ways that you can edit the information in the line items. And we've got an option with little plus button to create a new flow. So if you've got a new income, I'm just going to type in new income and we're going to create a flow for that one. Here it is here. So we can go, okay, well, we're going to get money in on a Wednesday again. There's going to be $150 on a Wednesday, not a Tuesday, every week. You can go fill. And that then fills through and adds up to the total lot of revenue for each week. Now, this revenue then feeds into the percentage, and then the percentage feeds into how much money we've got in the forecast. So let me just jump into the expenses for a moment. So the expenses are now grouped based on bank accounts. So we've got a GST bank account, which may or may not be relevant for your business, a profit bank account, which is always relevant for business, a tax account, an owner's pay account, OPEX or operating expenses. I always really like to call them bills. And then materials and subcontractors. So depending on your business, you may or may not have all of these different bank accounts open, but you can then set it up so that you've got the rules set up for each bank account and essentially a little budget set up for each bank account. So under operating expenses, we've already got subscriptions and insurance. I'm going to put some internet in there as well. Press the plus button to add a new code. It's a negative amount. It's coming out of the bank account, 100% certainty. So now we've got internet. Now, one of the things I love to do with our business clients is actually write it in per month on the 16th of the month. Let's make it the 20th so we can see it. So having the dollar figure and then having the frequency and then having the date makes it super easy for us to, number one, review what it is we're spending. So if we can scroll down the little list rather than looking at all the grid, we can then go, hey, my internet wasn't $45 last month, it was $90. Why is that? And we can go and investigate and see if we can get a better deal. The other reason is if we change internet suppliers and they don't take the money out on the 20th anymore, they take the money out on the 5th, we can come back and we can wipe out and zero out the flows and then put in the new one with the new dates. So this just helps us add that information in for the flows. And I'll show you why. Up here, internet, $45 a month, the 20th of the month. So we're going to use the little calendar here. and it's every month. And so now it's poured up 1st of January, the 20th of January, the 20th of February, 20th of March, 20th of April. Easy peasy spill, and that then pre-fills all the way through. You can set an end date if you like, definitely helpful there. So the more detail you have in here, the easier it is. So it might be car insurance for $500 on the 1st of March, annual. Oops. And so now when you go and set up that flow and push it through the system, you know how much it is and whenabouts it is. So 500, you can type the date in. Sometimes when it's quicker to do the calendar. And we're just going to change that to a one-off entry on the 1st of March. So we won't see that on this grid here because the grid only lasts for a month. But we can change the date. So we can change it to the 12th of February as the start date for the grid. And then we can scroll across and see that it shows up here on the 1st of March. So having it written in the title means that you can easily find it in here. Looks like I already had something in there for insurance. So if this was a real company, I would just zero it out and then put the $500 in again. So once you've filled out the rules of spending from each bank account, then we can go to the forecast. And this is where the magic happens. This is my favorite screen ever. This screen gives us the total bank account. So because we've updated the bank balances today, the yellow is what the actual bank balance is. So everything past this is just a forecast. So based on the income of $2,000 line item and then the $150 line item times by the percentage, this is what we're expecting to have in each of the bank balances as a total bank balance for each week. So based on each week, we've got totals coming through. So I don't have a lot of spending set up yet. So all of these bank balances are increasing, which is fun. We can also change the range so that we have a monthly view. So what is the bank balance expected at the end of each month? We'll wait for that one to load. So at the end of the 16th of Feb, 16th of March, all the way through to November. So look, here we are. We've spent a bit of money in August and September and running low there. So there must be something big happening there. And then we can also use the arrows to look forward as well. I tend not to go more than 6 months forward. It is exciting sometimes to look and see September, but then it is also depressing. The longer you have certainty with what you're forecasting, the more you can have a look at forecasts. So that's the quick little run through of the Profit First Profit, and hopefully it gives you some clarity on how to use it and what to do to edit the bits that you need. If you do have any questions, please reach out.